Now, we've all heard of Warren Buffett, the legendary investor who has made his fortune through strategic investments and shrewd decisions. One interesting aspect of his investment portfolio is his focus on dividend ETFs. But why does the Oracle of Omaha invest in this type of financial product? This has piqued Goldie's interest. The reason is simple. Dividend ETFs offer a reliable source of income through the yield provided by dividend-paying stocks. This means that even during volatile times in the market, the investment continues to generate returns, making it a safe and profitable bet for long-term growth. For investors who want to follow in the footsteps of Warren Buffett, picture this: a powerful trio of ETFs that combines unstoppable growth, solid diversification, and a sprinkle of magic. We've researched over 1,000 ETFs and carefully curated this portfolio to maximize your returns. It's time to take control of your financial future and give yourself permission to get rich. As the old Chinese proverb goes, the best time to plant a tree was 20 years ago. The second best time is now. Whether you're looking to get your ETF portfolio started or looking to expand your current ETF stack, we're here to offer you 3 solid ETF options to get started. Stop wondering what if and take the time to listen, learn, and take action using our advice. Hit that subscribe button and we will share the new and improved ETF portfolio to get you and your family rich. Make sure to stick around until the end to learn about what compound growth will do to this ETF portfolio. But first, what exactly is an ETF? It is an exchange-traded fund and a powerful investment vehicle that provides investors with a diversified portfolio and the potential for steady growth. The value of an ETF lies in its ability to offer exposure to a wide range of assets, such as stocks, bonds, or commodities, all within a single investment. This diversification reduces risk and enhances stability, making it an excellent choice for both novice and seasoned investors. With an ETF, investors can confidently tap into various sectors and industries, benefiting from the potential growth opportunities they present. The transparency of ETFs allows investors to track their performance in real time and make informed decisions about their investment strategy. Lastly, ETFs offer liquidity, enabling investors to buy and sell shares throughout the trading day. This liquidity ensures that investors have the flexibility to adjust their positions promptly. In conclusion, the value of an ETF lies in its simplicity, diversification, and flexibility. It empowers investors like yourself with the confidence to build a robust portfolio, grow their wealth steadily, and navigate the markets with ease. So, are you ready to take control of your destiny and build a life of abundance? Let's dive into our new and improved portfolio of 3 powerful ETF options. Our first ETF recommendation is none other than the Vanguard Total Stock Market ETF, or VTI. With VTI, you gain exposure to the entire U.S. equity market, capturing the growth potential of over 3,500 companies. It's like owning a piece of America's most successful businesses in a single investment. But what's even more exciting are the companies included in VTI. From Apple to Amazon, Microsoft to Facebook, VTI holds some of the biggest and most innovative names in tech, healthcare, retail, and finance. What we love is that VTI offers juicy dividends for its investors. But just how much is the dividend payout over a decade of investment? With an average dividend yield of 1.76%, an investment of $10,000 in VTI would yield a whopping $1,968 in dividends over the span of 10 years. That's easy money right there. Next up, we have one of our favorite ETFs, VIGI, which is a sparkling example of how a smart investment can multiply your wealth in the years to come. If you're looking to increase your portfolio with steady, long-term growth, then VIGI can be your perfect ally. This ETF tracks an index that includes a diversified set of companies from all over the world, aiming to deliver dividends at a consistent rate. As of August 2023, some of the top holdings in VIGI consist of companies like Novartis, SAP, Sony, and Nestle. These corporations represent a broad range of industries, including consumer goods, finance, and technology, among others. Investing in VIGI can help you gain exposure to these companies and diversify your investments across continents and sectors. The VIGI fund has performed exceptionally well over the past decade, with an average annual return of 7.76%. This means that over the last 10 years, your investment of $10,000 could have grown to over $20,000 in just 10 years, while earning quarterly dividends. VIGI has demonstrated impressive returns over the years, and by embracing a long-term investment strategy, you can benefit from the power of compounding to see your wealth grow significantly. So if you're ready to explore the fascinating world of VIGI, start by doing your due diligence and get ready to reap the rewards of investing in a successful ETF. And our final piece of the puzzle is the timeless and proven VOO ETF. This ETF mirrors the performance of the iconic S&P 500 index, which is a basket of 500 of the largest publicly traded companies in the US. But what are some of the standout companies in VOO? Well, you've got tech giants like Apple, Microsoft, and Amazon. Then there are financial powerhouses like JP Morgan Chase, Berkshire Hathaway, which is helmed by the legendary Warren Buffett, and Visa. And let's not forget about healthcare giants like Johnson & Johnson and Pfizer. Now think about this. If you had invested $10,000 in VOO, the Vanguard S&P 500 ETF, over the last 10 years, you would have made a serious profit with a total return of 214.62% over the last decade. Your initial investment would have grown to a staggering $31,462 today. And that's not all. VOO also pays dividends with an average yield of 1.34%. If you had reinvested those dividends back into the ETF, your earnings potential would have been even higher. With VOO's impressive track record, it's clear that this ETF is a smart choice for any investor looking to make a solid return on their investment. With VOO, you have the opportunity to invest in a well-diversified portfolio of big-name companies that have a history of success. It's time to jump on board and give your portfolio the boost it deserves. Now, we always want you to remember that smart ETF investing offers a diversified and low-cost approach to building a successful investment portfolio. By choosing ETFs that track broad market indexes or specific sectors, investors can spread risk across multiple assets. Wise investors consider expense ratios, liquidity, and the fund's performance history when selecting ETFs. Additionally, they focus on long-term goals, avoiding emotional reactions to short-term market fluctuations, and value compound growth, which is often referred to as the eighth wonder of the world by Warren Buffett. So what exactly is compound growth? Let's take a moment to discuss this financial phenomenon that holds the key to building immense wealth over time. It is the magic that turns small, consistent contributions into a monumental financial empire. At its core, compound growth is the process of earning interest, not just on the initial investment, but also on the accumulated interest over time. This compounding effect causes the investment to grow at an increasingly accelerated rate, creating a snowball effect that can yield astonishing results. The power of compound growth, when combined with ETFs, becomes a dynamic duo that can supercharge an investor's journey toward financial success. The compounding effect within ETFs is especially potent due to their low fees and reinvestment of dividends. As dividends from the underlying assets are paid out, they can be reinvested into additional shares of the ETF, thereby accelerating the growth potential. This reinvestment allows investors to benefit from the compounding effect without needing to actively manage individual stocks. The key to harnessing the full potential of compound growth with ETFs is to adopt a long-term investment perspective. Time is the most significant factor when it comes to capitalizing on compounding, as it allows the investments to accumulate and multiply. Reinvesting dividends and consistently contributing to ETF holdings are essential steps to take advantage of the compounding effect fully. Investors should also be mindful of their risk tolerance and financial goals to select ETFs that align with their objectives. The marriage of compound growth and ETFs is a powerful combination that empowers investors to build wealth steadily over time. The inherent diversification and low fees of ETFs, combined with the compounding effect, make them a smart choice for long-term wealth creation. By staying committed, being disciplined, and leveraging the magic of compound growth with ETFs, you can confidently set yourself on a path towards financial prosperity. If you're hungry for success and ready to take control of your financial destiny, don't forget to hit that like button and subscribe to our channel and share this video with your fellow friends and investors. Together, we'll unlock the path to building serious wealth and achieving financial freedom. Ready to take the leap and make your dreams a reality? The journey to getting very rich starts now. Now, if you want to tap into the exciting opportunities in AI investing, join us to learn about the top 5 AI stocks. Don't worry, you still have time to buy them early.